Hi, all. Good morning. Just give me a heads up. All good. Okay. Can we go on? Presentation, scene, video, scene, voice heard. Just give me a thumbs up. All right. Okay. So today's topic, again, is it's a very simple, very basic topic about SIPs and what are the scenarios that you're faced into when it comes to you viewing and looking at SIP. So it's a very basic uh, presentation. It's a very basic conversation. Maybe on the Q&A part we can have a lot more uh, complex, little complicated, but it's a very basic, very simple, just like a refresher in terms of how you can make every SIP count, right? But heads up, it's going to be very basic. Uh, okay, what is SIP? Yeah, SIPs is like your RD, but the good concept about RD is that it you have to do it regularly, right? So think of it like that. That this is something from a behavior perspective is very similar to that of RD. It's a disciplined approach. I have to continuously keep doing. Why do I say disciplined? Why do I say that? Yes, uh, it requires you to see wealth creation is a very long term concept, right? Why do we say that it is a long term concept? Because the journey of an investor, the journey and the life cycle of a particular person keeps evolving, and as scenarios evolve, as things keep evolving, financial assets as a percentage of household wealth definitely starts increasing and higher. Previous generation was more physical, more real estate driven, and today it's more liquid. Wherever there is growth coming in is majorly from financial assets, particularly on the equity part, right? So that requires some bit of time. That requires some amount of discipline. You have to go through that. It's a journey. You have to go through it, but you cannot go through that particular journey if you're not disciplined. If you're not consistent about what you're doing. For example, how is it that athletes get to where they are today? Because they show up. They are right there. They show up always. Right? They had a bad game. Next day they are on the field. They had a good game. Next day they are on the field. Right? Practicing. Like they're on the field continuously, irrespective of whether they've had a bad game or a good game. Right. So think of it more from a disciplined approach that yes, you have to continuously keep showing up. For the first 3 years of a SIV journey, it's going to be more uh, discipline where you do not think majorly of returns. You only think of showing that level of commitment, showing that level of consistency in you, putting in that amount monthly, right? Monthly is preferred, weekly, daily is up to you. Monthly is preferred. Right? We do get a lot of queries about weekly and daily. It does not matter. You stick to monthly because it's more easier for you, right? How much can you sip? What is the maximum that you can sip? What is the minimum that you can sip? See, I would say that you have to look at it more from a goal oriented basis, right? For example, if you have education, if you have a house goal, for example, if you have a travel goal, right? Reverse calculate always. Today, education inflation, medical inflation is very high, right? So we go with that amount, say you need 20-25 lakhs as a milestone. You need 10 lakhs as a milestone. You need 15 lakhs as that particular milestone that you have to reach to for you to be able to meet that particular goal. So in relation to that particular goal, how much SIP you need to do? Right. You can always start in small. There's no problem with you. But how much you have to be aware of how much you would be required for you to be able to meet that particular goal. There is a comment that says, please include Tamil. Please, you can converse with me in Tamil. I will not be able to converse too much in Tamil with you. But this is going to be purely English. I'm very sorry to disappoint, but everything is going to be English here. Like slides are not moving. Is the slide moving? You can just give me thumbs up again. It's a good thing that I asked you all these questions beforehand. Okay. Now is it moving? Okay. So I stopped at this, right? So it depends on your particular goal, right? Reverse from your goal, your this is what is required for you to meet your particular goal. Okay, as per that, I need to do this much SIP. We will help you in understanding how much SIP you need to do. But if you're just starting out, if you're just looking to save for your wealth creation, which is an extremely long period of time, 20 years, 25 years, right? Then you can start off with any amount possible. Now there's a new concept for 250 rupees also. So you can start off with that also. There's no minimum maximum. You can start off with whatever is comfortable to you first. And as you progress in your life, you will be able to understand the benefits of you doing this on a regular basis. You showing that level of discipline and commitment, you'll see actual results. And that will push you to want to do more, right? Okay. Now, how long should you run your SIP? Okay, now I'll ask a question to all of you. How long have you currently been running your SIP? How long have you currently been running your SIP? You can put your comments in the chat box. Okay, there's one. It's not how long you intend for. How long are you currently running your SIP for? Yeah. Not how long have you are you intending to invest? How long have you currently invested for your SIP? Okay, there are comments saying 5 years. There's a good comment that says till the goal is achieved. There's another five. There's three. That's very good. Till the goal is achieved. Yes. There's 2 years. There's one interesting comment called 100 years. Okay. Uh, Depends on the goal. Yes. 10, 15, 7 to 8, 15, 2.5, 3, 5, 5, 6. Okay. You've been running at 14 years. That's fantastic. Uh, 2 years, fourth year from the last cycle, fantastic. 2 years with M2W, 7 years totally. I'll go with the 7 year number. That's very good. Few 3 years over, next batch is 4 years, fantastic. So all of you are somewhere between the uh, fourth and the fifth year. That's a very, very good number. That's a solid number. I see some on the longer end of that curve. We have 10 years, we have 15 years also. I don't know if the 100 year is true, but I like the intent 100 years. Okay. Generational wealth. All right. Yeah. See, typically, until your goal is met, see, this is some when you get into that consistency and discipline, that's not supposed to stop, right? How many of you are actually thinking about, okay, there is a problem for me now. I think that I should, the market is going through its own, it's very, very volatile for me. I don't think I can go through it, so I will stop my SIP or I will stop contributing to the equity market right now. How many of you are actually of that thought process? 4 years is good enough for you to see a good cycle. And since you all started in 2019 and 2020, right? You've seen a one way up. Now, how many of you are actually not confident about the current market? There's a comment about invested 50 lakhs as of now and planning to keep it aside for the next 10 years. Okay, we'll look at that case also after the presentation. Moving from MF to PMS, we'll look at that also. But how many of you are actually of that thought process right now that things are not looking so good, I'm not very confident, I would like to stop myself. Understood that it is a part of investing side and equity. Yes, for the next 2 years, market is expected sideways. Okay. I don't care where the market is, will continue to invest as per the number of years which I decide. Fantastic. You've already stopped SIP your, you already stopped your SIP in MF. Okay. Okay, but you're being very selective. Okay, started to do SIP in debt fund, stopped SIP in defense MF. Very, very good decision. Okay, paused only in the microcap index, will resume in the next month. Okay, not planning to stop till retirement. That's a fantastic view. Market's not looking good, need to wait for a while, but adding some additional purchase as and when possible. Okay. So I got a good sense of what you all are thinking. But which I will address probably at the end. There are a couple of more slides and then we can get to Q&A. But how long should you run your SIP? You should run your SIP until your goal is met. Right? That discipline, that rigor is what you need to maintain up until your goal is met. Why? For example, now when you have the education goal, when you have the house goal, when you have all these goals trying to come in, and the last goal is your retirement, right? So it leaves more once your goal is being met. It leaves more money for you on the table for you to put that money back into wealth creation and retirement. Once that thing is met, you finish that part, and then from there on, you have more to add to the next particular goal. Right. So I'll go with that comment to say how long. Yes, it should be till your goal. Once your goal is met, it leaves more money on the table for you to contribute to the next goal, which is probably your wealth creation goal or your retirement basket. Right. So uh, how many mutual funds should you SIP in? This is another very important question. Is there a good number for you to think that okay, this me doing SIP in these many number of funds is good for me? How many is that number, do you think? What is that number? Oh my God. My case is decided by my advisor. Four is enough. Okay, that's five. Okay. There is I have one ELSS, one flexi, one large cap. 5 to 7. Now it's eight. Okay. Three SIP, PPA, phase flexi, ICSI hybrid, MN fund. Okay. Each category 2 to 3. Oh my God. So there's mid, small, large, flexi, multi, uh, value, contra, dividend yield, index, hybrid. Within hybrid, there is aggressive hybrid, balanced, conservative hybrid. So each category two. I think you have a lot there. 5 to 7, trying to avoid too many overlap. Depends on income, risk, and risk taking capacity. That's a fantastic point. 5 to 7 if equity fund, if equity because of thematics, but if you include gold and silver and debt, then it will be 15. One large, one mid, one small, one gold, one Nasdaq. Okay. Started with index, but now in flexi and based on momentum. So you have three. But the right answer that I would say out of this is based on your particular goal, is based on your particular risk appetite. Certain goals require a certain risk appetite that you have to display. Some goals you need to have debt, some goals you need to have more conservative assets that you're able to meet, because the priority then is not growth. The priority is then to how do you best meet that particular goal. Sometimes it's more liquid. It has to be emergency. Sometimes it has to be liquid in nature, right? Where it does not earn too much money, right? So you can have a category there, but it's based on a particular goal. For retirement, of course, then your risk taking up capacity starts coming in. That's why at Milestones2Wealth, before we start doing anything for you, you are going through multiple checkpoints, which is your risk profile test, which is a financial health checkup, where we try to understand what your potential is, make you aware of what your potential actually is, right? And then look, make you understand what kind of a investor or saver you are, right? What your personality is. Your ability to take risk and your willingness to take risk are two separate things. So we make you go through these multiple checkpoints and only then start doing and start redirecting your SIPs for a particular goal, right? So there's no number to say that no, three funds are great, five funds are great, eight funds are great. No, it depends on your particular goal. It depends on your particular risk appetite. Risk appetite first, then your particular goal. Because here we need to understand what sort of a saver you are, and you need to be aware of what sort of a saver you are, whether you have the capability to take certain risks or not. Right. So here I saw some comment that says momentum based funds. Momentum based funds are definitely not suited for anybody, whether you are an aggressive risk appetite or whether you're a moderate risk appetite. Like it's backward looking. It's you need active management on the momentum fund side. So definitely it's not meant for. It definitely not meant for Indian savers as a concept. Yes, it's good, but it's not meant for retail. It is meant more for corporates, more meant for institutions that understand how this entire thing plays out. Definitely not based on returns. Okay. Now I have one more thing that is based on those returns. Okay, now what is a good savings rate? Savings rate is basically this. This is how you make every SIP count. What is a save? What is your savings rate? Savings rate is basically the income to your expenses. The amount of income you earn and the amount of money that you spend at the end of the day, at the end of the month, or at the end of the year. This is what I'm able to save out of my total income. What is a good savings rate? 30%. Okay, I'll go with the waiting for the next comments to come in. 20 to 30%. 30% minimum will be better. Okay. 30 to 40%. Okay. 25, 30. All of you are of the same view. Spends on a lifestyle, but it depends on a lifestyle. Okay. But 30 to 50. 12 to 15 is not a good number. 12 to 15 is definitely not a good number. 25%. All right. Most of you are within that 25 to 30% range. A very good number will be as a base 50%. Extremely good number will be above 60%. Right. That's the point. That is the struggle from 25 to 50%. Right. Depending on your particular lifestyle, depending on your uh, uh, leverage as well, whether you have taken up more loans, whether you're still in debt or not. Right. But the whole idea is for you to be between that 30 to 50% and strive to go beyond that particular 50%. So it's not to say that you should live a very frugal life. No. But what you should be doing is you should be able to contribute anytime you're having a bonus, anytime that you're having something extra coming to you, and that goes to your savings kitty into financial assets, right? That conversation, that thought of which fund, why this and why that. See the number of funds, right? You look at there's so much of noise. Should have this much, one large, one of this, one of multi, three of this, four of that. That is not for you to think about. What you should be thinking of majorly is how do I keep increasing my savings rate little by little slowly so that I can get to a good rate where that kitty for me to meet a particular goal is achievable. Right? And it's achievable much faster than what I've planned for it to be. 10 years should be able to be what is planned for 10 years should be able to achieve in 7 years. So that extra 3 years of what you save, And that behavior that you've showed for you to get to that 7 years, that 3 years is additional compensation for you, extra, right? It's extra for you to be contributing to that particular goal, right? So a good savings ratio that you should look at from a household perspective is 50% or so, but most of you are within that 25 to 30 range, which is very good since you understand itself that you've done that level of work for you to know where you stand. That's a very, very good part. But that 30 to 50 is a very, very good challenge that you should take up. And above 50 is a very good. Like if you reach 60, 70, it's excellent. Right after that, it's excellent. Then you are a high savings potential household in India. All right. Okay, should I do only SIP or should I do only lump sums? There was a very good comment that came in here saying that I've stopped, but I'm able to contribute and I do monthly, or I try to do something from a lump sum perspective, right? Okay, now should you do any SIPs or should you do only lump sums? SIP as well as lump sum preferred. That's a good comment. Both depends on opportunity, all right? Both. I'll flip the question to you again. Why should you do a lump sum? Okay, lump sum whenever cash is extra. Okay. Many of you are telling lump sum is an opportunity. What sort of an opportunity is it? Is it market-based opportunity or is it that you're getting a lot more income coming in for you and hence it is an opportunity? Market-based opportunity. Okay. Whenever the market gives you opportunity. Yes. But the for the market will always keep giving you opportunities. I'm going to tell for this year, you will always get opportunities. So what will you do then? That every time you're going to do lump sums, how are you going to plan for lump sums then? Okay, there's a comment. SIP for those starting new, once matured and understand savings and investment, start doing lump sums after identifying proper portfolios and market scenarios. Complicated. When the market is down and we have a backup. Okay, now you are going to be in a scenario. Let's real life scenario, right? You are going to be in a scenario where the market is only going to give you opportunities. What do you do then? When the market goes down, right? For 2 years, you see no return coming in from the market, and you're doing your SIP. So what do you do then? Are you going to wait? Say no, I think it's going to go down, and I'll do bigger lump sum at that point in time. Are you always going to be in a position for you to be able to do lump sums as the market progresses, as you see no return coming in from? Won't you get tired? Think and hearing that. Yeah, I'm always listening. There's opportunities. Won't you get tired? What is this? My advisor is always coming at me. What is this? All videos that are coming everywhere talking only about opportunity and opportunity and opportunity. I'm not seeing the market do anything. What is this opportunity that they're talking about? Add more, sip, continue to sip. Okay. Say the NAV was 400, now it is 350. Good opportunity to lump sums. Okay. Increase SIP by 10%. That's a very, very good comment. Yeah, increase SIP by 10% because you don't know how the market is going to look like, but you are in a position to keep as you are having more income coming in, growth coming in for you in your life. You say, no, I'm willing to contribute more to the market. Yes, fantastic. That's a very, very good answer. Move to debt in this scenario. No. Trend based lump sum. No. Staggered lump sum along with SIP when the market goes sideways. Okay, that's a good answer, anyways. That's what we are always talking to you about. That the concept of you doing lump sums during market when the market gives you opportunities, right? But the most important thing, which was a very good comment, that you are going to have growth in your life, right? Your income is going to grow. right? I'm going with that assumptions that you will have that level of stability coming in and that your income is going to grow. So you are always going to be in a position where you have the opportunity to do lump sums. Like opportunity is more from your end than it is on the market's end at base case, right? Because you are not going to as that income grows up, you always have that extra money to keep pumping into the market, right? So whenever you are getting that extra, right, whether it is lifestyle based or whether it is based on your income, based on your career growth and all, other things, based on some inheritance that comes to you, based on some sale, right? Whether it's a real estate, whatever that sale may be, right? That is an opportunity for you. Opportunity comes to you at that point in time, right? Markets will always give you opportunities that we are sure of that you at some part within equity, within all the asset classes, you will have opportunity, whether it is equity, whether it is debt, whether it is precious metals, right? More opportunity was coming on the precious metals for the last two years. So investors that we've been working with for particular goals on the wealth creation part had more precious metals coming in. Investors who had a retirement goal, which where they were more aggressive in nature, more equity was there. Like today's scenario is completely different, where debt is becoming a good opportunity. So opportunity across asset classes will be there, right? But what you have to think from your part is I'm going to get that money, right? I'm always going to be in that position to have that level of money. So what do? You either step up your SIP number one, or uh, you do a mix of SIP plus lump sums, right? And leave it to advisor, where your advisor does STP and all of that for them to not try to time the market, but give you that experience that no, I'm good. You are going to be saying for a particular goal, so I'm going to be doing this for that particular goal. Right? Not take too much of aggressive calls. Be conservative where the goal requires for me to be conservative. Simple. That's the level of work that you have to do with your particular advisor. All right. So a mix of both, yes, but always look at it from a point of your part that yes, you are going to be in a position. This is that financial asset. This is a savings kitty for you that you have to contribute to. So don't try to time it based on market opportunity. Though we will come to you whenever there is opportunity for you to invest in. But from your part, you always have to think of yes, irrespective of any market for me, I am still going to have that priority. I still have a priority to meet a particular goal. So I have to invest anyways. All right. Okay, how much should you step up your SIP? There was a comment that said step up by 10%. How much should you step up SIP? 10% minimum. Minimum. Okay, yours is 10% in the last 4 years based on the amount I have. Yes, let's go with that. Based on the amount you have. It depends. Some years you might have more, some years you might have less. Some years growth might be very high for you, some years there might be no growth. So it depends on one, what your income is and how much you're able to grow, depends on you. Second thing is, if the goal requires for you to do this much, then at best try to meet it. But depends on your income. Anytime you have some level of income growth, it's your duty, your responsibility to be able to step it up by that much. Right? But there's no magic number. The magic number is you. It depends on you, it depends on your income. Right? Second thing is, yes, how much is that goal required for you to contribute towards? Based on that, you try to increase it. Right? Advantages of working with a professional, yes, or rather uh, if you do work with us, then you see professional management coming from our part. We have a team, entire organization probably would be 80 people or so, and we've been doing this since 2013. You're seeing us everywhere. Our content is across YouTube, Instagram is there everywhere. We help you to do regular savings in terms of SIP. See, we like to do more SIPs in terms of you start. If you're starting off, then SIPs is the best for you. Uh, Second, it takes away any behavioral bias. So when you're working with us, when you're doing SIPs with us, we make sure that there's no behavioral bias coming in terms of the first 2 years, you will always have that level of problem where you see a SIP is also very volatile, right? So that level of bias in terms of what has happened or you going towards past, that definitely is not going to happen with us. That's not going to happen with you even when you're going and doing your SIP. It takes away all of that, right? And most important, cost averaging. Whether you start at the peak of the market, whether you start at the bottom of the market, it converges as you spend time in the market. It converges. So don't think too much about. I started at the peak, so I don't want to do my SIP. I should stop and move to the next thing. No, that's not how it works. In time, it uh, converges to a particular rate. That rate somewhere would be your India growth rate for SIP is somewhere between 12 to 14%. We've seen it in history be 14, but 12 conservative is a good number for you to look at when it comes to just regularly doing your SIPs, making sure that these biases go away and you work with a proper professional. Right, that is the power of SIP. Look at the power of SIP. uh, you have more and more units as the NAV starts to come down. Somebody said that yes, I will do more lump sums, but yes, as you do more SIPs also, as you let your SIPs run, each installment that goes for you at attractive rates, you are able to acquire more and more units, and that is the whole job. This is what is cost averaging. Uh, it helps you to acquire more and more units at a particular NAV. So SIP without breaks, right? This is what has happened in this period, right? 21 to 24. What has happened in this period? You see 22.5% of XIRR coming in. These are real life scenarios taking place. SIP with a break during a dip, that return comes down. But don't look at this history that say last 4 years has been phenomenally well. Hence, this number looks very, very good. But over a long period of time, which is 15 years or so, you can expect somewhere between 9 to 12% on your SIPs. That's what you expect when you put money in the Indian market. Uh, it's much more than FD. It's much more than inflation. There was a very good comment about inflation that I'll step up my SIPs based on whatever inflation is there currently, and think of it more from a household inflation, which is the growth in your household expenses. Try to match that. Right? But SIP without breaks does much better in history than SIP with a break. So wherever you said pause, please rethink on that part. Right? These are some NAVs. Look at when you're doing uh, some NAV statistics here. 3,000 rupees per month, your average is 108, and then you get 1060 units. Right? That's just what math we derived out of this. Okay. Now these are some questions for you. I have a lot of expenses this month. Should I stop my SIP? It can be any expenses that come to you. Uh, I have many expenses coming. Should I stop my SIP? Question for you. No, no, no. All right. I'll take no. Majority no coming in. No, never stop at any cost. No, plan expenses after investments. Depends on the priority. Okay. Yes. Plan expenses ahead is what I would say. That means your first line of defense needs to be insurance. Your second line needs to be emergency reserve, and then only it comes to putting money in the equity market. No, we should have a backup for that apart from emergency fund. Fantastic. Pull from emergency fund. Yes, we are all on the same page. Pull from emergency fund. I'm planning to go on a Maldives trip next year. Should I reduce my salary? Any other trip is also fine. I just put Maldives because I think from a trip perspective, I think it's fantastic. So you can have anything. You can have Bali, you can have within India somewhere. Delay your trip. Okay. Plan for debt SIP for 1 year. Do separate SIP for debt. Yes, do a separate SIP for debt. Very good. Plan ahead. Do a separate SIP for debt. Don't pull out from your wealth kitty or your retirement kitty. Don't disrupt any other goal. Have a separate SIP for trip. I am doing RD. Fantastic. You're on the right track. We would love to review your entire plan. That is also good for us. SIP for trip planning. Fantastic. Yes. Okay. Now there was a comment, right, about thematic funds. Some thematic funds have been performing well for a while now. Should I redirect my SIP there? Should I stop my SIP, for example, in a particular fund, and then start SIP there? No, no. Okay. Any other comment? Thematics are seasonal. Okay. No, it's purely our advisor decision. Okay. Very good. Thematic, some good opportunity, not for SIP, which is more lump sum oriented. Okay. So I think it should be based on the advisor. PSC funds were cheap few years back. Okay, based on advisor, very good. Yes, based on your advisor. Your advisor knows more about your risk appetite than you. Definitely, they are more experienced, so definitely they will be able to give you some help, right? So, but just because they are performing very well, you should not go and do your SIP there. Always consult with an advisor. It's like going to a doctor. Always consult before taking some medicine. Okay, I saw a fund yesterday. Last 1 year returns have been very good. I'm confident to start my SIP. What do you do in this scenario? Some fund keeps coming, economic times, value research. So what do you do then? So 1 year returns are very good. So what do you do then? Then I think yesterday we saw Morningstar come up with their list of funds. More research is needed. Okay, history may not repeat. Analyze more and put small money. Let it run for some time. Okay. Yes, history may not repeat. Definitely, that is the right answer. That past is past. What has done is done. But all investing needs to be forward looking. It does not need to be based on a rear view. It does not need to be more backward looking. Okay. All right. Now, just something about milestones to wealth. Our promise is to handhold. Our promise is to guide. Our promise is to measure each and every progress that you're making. That's why we have this program itself. The whole idea is to make sure that you have a particular goal and have a particular milestone through which you're investing in. It can be as small as two, it can be anything, it can be as high as 10 crores also. That's not going to be a problem. But the whole plan is for you to start step by step and invest with a particular goal where we will be there with you through your entire wealth creation journey, helping you out, guiding you, and making sure that you're able to meet that particular goal. Right. So what is the outcome? The outcome is financial discipline. You're having a growth mindset. It's not going to be something that's backward looking. It's always going to be forward looking. And what we come with is a good amount of conviction, depending on your risk profile, depending on your appetite. Everything is based on a particular goal. Hence, we have the wealth map. It's a journey. It's a map. So you have to take steps. You have to go left. You have to go right. But you will definitely be able to reach that particular destination. And this model is built for scale, so you can, it's seamless for you to go from one milestone to the other. You can go from MF to PMS. Whatever is suitable for you is what we will do. And we are only looking for you to be able to do your best, do and meet your particular potential. Right? Do it as per your high potential. Right? So that is what we mean by scalable. From wherever you are, our entire goal is that we will help you reach 1 crore. Your first target is 1 crore. Once you reach that 1 crore, the next 10 crores is going to be very easy for you to achieve. Right? Now I'll open the floor for Q&A if any. Previous performance doesn't matter. We have to look into the valuation theme and many other factors. Yeah, this is where advisor is it. Yes, you have to work with your particular advisor. How to rebalance? Very good. Rebalancing comes only when you're very close to meeting your particular goal or you've met that goal. After that is what you need to think of rebalancing. Right? That's one. Second, if your advisor does say that no, it's valuations are extremely high, and now we should not do this particular part of investing, then yes. Otherwise, only two cases for when you have to rebalance. One, you're very close to meeting a particular goal, and second, when there is exuberant valuations in the market. Is it good to start really now? Depends on your risk appetite, depends on your goal. Second, depends on, see, PMS is a product that requires more and more capital every time, right? So capital calls are definitely higher on the PMS side, right? Whether it is solitaire, whether it is the all of that. But the whole idea for the PMS is that you should be able to contribute more and more when market opportunities arise, right? So if you're not in that position and if you're more disciplined in nature, then stick to your MF, right? But given small cap valuations, particularly for Vriddhi, is a good time. Particularly for Vriddhi, it's a very good time, right? But depends on your risk appetite, depends on your income purely based on that. So this is a very very aggressive study, so it depends on that. So don't go by returns. If you reach 50 lakhs, then is it possible? Yes, it's possible, but depends on your goal, but definitely possible. See, on the PMS, the call for capitals are definitely going to be higher. And it's if it's not even, so in terms of MF versus PMS, MFs are definitely more tax efficient, right? But if tax is not a problem for you, then and income is not a problem for you, then PMS is very good. But if all of that is a problem, then stick to doing MF. I'm doing small and mid cap for long term. See, long term is very subjective. If you're doing it for 10 years, 18, 19, 20, 21, you did not see much returns coming in from small caps from at that point you uh, 40-50% of the time staying invested in that theme, you're not able to make the best out of it, and hence your experience is getting hampered. Right. So we would like to review your entire portfolio. You can just send us a hi on this number and hold on. So I'll just put out that number and then you can just send a hi to that number, and then our team will get in touch with you for us to be able to understand what your risk appetite is and whether you need to be doing a SIP there or not. Any metrics to track thematic fund opportunities? See, it's cyclical. There was a good comment, and we have been doing sectors and thematic funds only. Right? We've been doing that from the beginning. We've always believed that whenever you have very good opportunities and the cycle is down, then thematic funds do extremely well. But depends on the theme. It cannot be broad based. It has to be concise. It has to be, you have to put a pin on it, and only then you will be able to take advantage of it. Okay, in 10-year period, how would you prioritize solitaire, MF, gold, true blue, and Vidhi? It depends on what your need is. Yeah, it's not based on the tenure also. You might have a 20-year tenure also, but the need is to retire, and that you have an aggressive risk appetite. Then we can take that level of aggression for you. But it depends on what your need is. One, that means what your goal is, and second, what your risk appetite is. So even if you're having a conservative risk appetite, 10 years, we will just stick to doing MFs and all of that. Depends on you. It has to be tailor-made particularly for you. It's not one size fit all. Okay. Uh, Is rebalancing during cycle peak a good habit? See, you are taking some risk off, but your job then becomes okay, from there on, I'm not going to stop my investing, but I'm going to redirect my savings to another asset category, to another class, which is very cheap. For example, equity to debt is not a bad idea. Equity to gold is not a bad idea. Gold to equity is not a bad idea. Right. So during a peak, yes, definitely you have to show that level of activity. You cannot say long term and say, I'm just going to stay invested for a long time. No, long term demands that you have to be active when there are peaks, when there is extremity coming into the market where it's more sentiment driven, has no fundamentals to it, then that is you being an active investor. Otherwise, long term doesn't mean passive. Long term means you're always at the game. Right. What do you think of SIFs? Milestones2Wealth can do this. I don't think that we would like to pursue it now for sure. Let it develop. It's too soon. But I mean, it's just another category. I think that you should just stick to doing RMFs. Don't try to do all these things just to make more than arbitrage return. Just stick to doing MF. Anyway, there the minimum investment is 10 lakhs. Just because minimum investment is 10 lakhs and that is a higher ticket does not make it better for you, right? So just stick to doing your MS first. Let that space develop and evolve. You have a long way to go. We have a long way to go. So don't worry too much about it right now. If an opportunity comes, we will explore it, but let it evolve, let it develop. Okay, is next 50 advisable for my kids? Uh, See, you have long ways to go, 20, 15 years. So I would always prefer active over passive when you have that level of approach. Passive is more backward looking because what performs then starts coming into the index. And when you're thinking of index, you just think of it more from a 9% sort of a return perspective. Uh, and it is definitely backward looking. It is one step back. Yeah, active fund managers who have experience in the market definitely do a better job in terms of making sure that of what to go underweight on, what to go overweight on. So there are certain risks in the index that you'll be taking by investing in it. And this is a concept that works very well on the West because it's extremely liquid. There's only money that keeps flowing into their market. So definitely not for us. We are a developing nation. So active is definitely preferred. Tactical calls for passives are definitely there, but active should be the driver for growth. Yes, thank you. Going to the next. Yes, please, you can go to the next. We have 1 more minute for Q&A and then probably we can close. I've also put on the link, so you can just look at our website. There are you can contact us there. Send us a hi if you're interested. Just get in touch with us and we'll do our best to make sure that we come up something tailor-made for you and a solution for you so that you're able to meet your particular goals. Right? I'll also put out the Google review. So please do review us on Google. We definitely want to be known. So help us out there. Send us a review, rate us. We want to reach more and more people. We want to do good to more and more people out there. There are a lot of people that require this level of service, that require this level of handholding. So help them out a bit, help us out a bit, and send us a review. I put out straight on Google. You can just send us a review there or a testimonial there. Right? If you're not on the program, send us a hi, get in touch with us. We'll do our best to serve you. Done. I don't think I'm getting any more questions. I put out the link. Please do rate us. Done. Thank you all so much for joining in on a Saturday morning. Have a good weekend ahead. Thank you.